Good evening, everyone. Welcome to Officers 24/7. My name is Niharika Walia Bhatnagar, and I'm with you with the specific area of accounting and financial management for bankers. Everyone, I hope I'm audible. Let's begin with the session. Today, what am I going to talk about? I'm going to talk about the specific area of Module B. Further, we have covered a lot of chapters of Module A. I'm starting with the next chapter of Module B of our 3000 plus MCQ series. Here comes the first question, everyone. The first question says, which of the following represents the fundamental balance sheet equation for a business entity? Everybody? Fundamental of the balance sheet equation. How do we define it here? Okay, the first question has said that we have assets, we have is equal to liabilities minus owner's equity. But everyone, I bought a car. How will I buy my car, everyone? If let's see, this is my car, and how do I buy my car? There must be a way, na? I cannot spend maybe 10 lakh or 12 lakh altogether. This is eradication of my savings right away. है ना? All of a sudden I'm taking out 10 lakh, 12 lakh out of my savings. How will I survive in the emergency situations then? That doesn't make sense. So if I'm making my car, that is my asset, how do I make an asset? I make an asset by adding two things. One is liabilities, that is your outsiders funds. For example, I took a loan, but obviously I cannot take the entire amount as a loan. You will take partial amount of loan, not the complete amount of loan. So when you have a partial amount of loan, and then you also have your owner's equity, this is your own funds. Obviously you cannot use all your funds, or you cannot use all the loan, है ना? So you will have a blend of both. Either you will go for one, either you will go for two, or you will go for both of them together, won't we? So in this case, can I say, when we talk about this specific area of this particular question, which is nearest to the point? Assets is equal to liabilities plus owner's equity. Isn't this the point? B is the correct answer. Assets plus liabilities is not owner equity, and assets minus liability. वैसे ना actually B and D both are correct, पता है? Both are correct, but the correct one, which is actually stated in the books of accounts even, that is B. ठीक है? This is called balance sheet equation. Done, everyone? चलिए then. Let's move on to the next point. If a business assets increase by 50,000 and its liabilities remains unchanged. Acha, I've increased my assets. I've recently got 50,000 rupees ka asset, and then my liabilities are not changing. Probably I'm not taking a loan. Then from where I'm getting this money? What is the what is the expected impact on the owner's equity capital, everyone? then what's going to be the point? Owner's equity decreases by 50,000, owner's equity remains unchanged, owner's equity increases by 50k, or cannot be determined from the information provided. See, the point is, if you have used 50,000 rupees in terms of your business assets, that means you took out cash of 50,000 and used it in the business. You know, so technically on the asset side only there is an imbalance. You know, so in this case, what's going to be the answer? What's going to be the correct answer, everyone? Everybody, what's going to be the answer in this case? If the assets increase by 50k, if the asset is increasing by 50k, then obviously there is something that is decreasing by 50k as well. How do I buy a car? Matlab, I will reduce my savings and put it in the car. So my cash will decline and my asset will increase. Technically, on the same side, things are happening. Now, in this case, this 50,000 is what? It is based by you are using your own funds in this case. That is why it is used that way. So if you have got a cash of maybe 50k in your books of accounts, so what will you do? From your asset side, remove your cash, put in that asset. You know, if in case the question says that you, if you look at the specific area from the point of view of the business, what do? They pick up the value of the ownership in terms of that particular organization. Once you know about that part, then what do you do further? If the value of that asset increases or decreases, by the time I come back, we'll still have a specific knowledge of what is happening in the business now. Once you know how much cement has been put in, how much working has been done in terms of the business there, if you know about it, then there is no problem, isn't it? Done, everyone? Let's move on to the next question. Mr. R started a business with an initial capital of 1 lakh. This kind of question we have just done yesterday. During the year, the he purchases machinery worth rupees 30,000, everyone, by paying the cash. Then later on, takes a bank OD of 20k to purchase machinery. Mr. What is Mr. R's net worth? Net worth is basically your own funds. What's going to be the answer, everyone, in this case? See, the point is your initial capital. You initially invested 1 lakh into the business. Then, out of this 1 lakh rupees that you got into the business, 30,000 was released from the cash and added in the furniture. So, that means the capital side will not change. What's going to be the answer in this case, everyone? Look at this part. Look at this part very carefully. When we say that you have got 1 lakh rupees, then out of this 1 lakh 30,000 is gone. This was your total cash even now. The first entry is cash to capital. So you have got a capital of 1 lakh rupees. Huh? So if you have got this capital of 1 lakh, what next will you do? If I have got this 1 lakh rupees, from this 1 lakh rupees, what will you do? In this case, once you have got this 1 lakh, then out of this 1 lakh, remove this 30k, because this 30k is what? This 30k belongs to some other business, है ना? And later He takes a bank OD of 20,000 to purchase machinery. Now, this particular amount is eliminated only from the cash side. This won't be a problem. The problem will arise when the bank OD has been taken, bank overdraft, which was again another machinery. See what's going to be the answer in this case. What's going to be his net worth? If we talk about the net worth, it includes both the funds. That is their funds. If you talk about 1 lakh, 1 lakh is still there. His funds are still 1 lakh. 20,000 extra that you have got is basically outsiders' funds which you'll have to pay off. So technically, this is 1 lakh only. This is a crazy level question because it confuses the question, the reader a little bit. है ना? Which of the following is true regarding the relationship between business and its owners as per the accountancy concepts? As per the accountancy concepts, the business and its owners are considered as a single entity. That is business entity concept, which says humans and their businesses are not the same. Next point is all the transactions of the business are recorded from the owner's perspective. Next is the business and its owners are considered are whose separate done everyone? Look at this part. The business and the owners are considered as two separate. This is separate legal entity. And then we have the next part. Owners' personal transactions are recorded. If you record both the transactions in one particular place, how will you find your personal profit and your business profit? Ultimately, you have to pay taxation on business profit and you're answerable for the same. Everyone, when we talk about accountancy concept, the correct accountancy concept is the business and its owners are two different things. This is called business entity concept. Men may come and men may go, but the business is here to stay because business is separate from that of its people. है ना? Here comes a few questions of reasoning and assertion. Everyone in the exam, they have started giving a lot of questions from this area as well. When we talk about reasoning and assertion, assertion is said that selling goods on credit increases the net worth of the business. If we go sell goods on credit, then it goes into the greater wala area in bank. In this case, what's gonna be the answer, everyone? See, selling goods on credit increases the net worth of a business. Everybody, first part is when selling the goods are sold on credit and the debtor account is increased by sale account, then the cost of goods sold is reduced and by the interest and then the interest portion and then is resulting here and then we look forward to it in certain manner that A and R are true and R is the correct explanation or A and R are true but R is not the correct explanation. I, R when we talk about this, A is true but R is false, and A is false but R is true. What's gonna be the answer, everyone? When we define the goods which are sold on credit, that means in this case you're getting a debtor and of course you are making a sale as well. So in this case, when you do this, you make a profit, and the profit ultimately goes into the portion of your uh, profit goes into your net worth increases, your growth increases. So technically this part is actually correct and this is the correct explanation of A as well. Okay everyone, let's look at the next question. It says that paying rent and salaries reduces the surplus in the business. Nay, rent and salaries are inevitable. Next, the next part that arises here is when we are done with this part, that paying rent and salaries reduces the surplus in the business. Paying expenses like rent and salaries decrease the cash assets and simultaneously reduce the expenses and surplus, lowering the net worth. See, when you are paying these for expenses, now you are gaining some funds. In this case, when we talk about this area, you get some funds and this is where you work further. See, if I pay rent and you pay salaries, this is going to reduce your profit for the year, but not the net worth. Net worth increases when you make more funds. So technically there's one part that is correct, both A and R are true. So when we talk about this area, if your profit for the year gets less, your surplus gets reduced further as well. When your surplus over the years is reduced, then your net worth is also reduced to a great extent. So in this case, when we look at the answer, both A and R are true, and it's a correct explanation as well. See, if you earn less, then obviously you make less money as well. Every financial transactions in a business affects two accounts. वैसे तो this is as per double entry bookkeeping that everything that happens in the business is on two bases, debit and credit. According to the double entry bookkeeping system, each system of dual effect, ensuring assets is equal to liabilities plus owner's equity. First is A and R are true, A and R are true, and R is not correct, A is correct, and R is false. When we talk about this area, see, every financial information affects two areas, that is assets and the liability side. So in this case, if it affects both, then the correct answer is true. Why? Because your money, whatever you make, is because you are getting the funds from one place and employing the funds at the other areas. After selling the goods on credit for rupees 5,000 with the cost of goods for rupees 3,000, what is the effect on owner's equity? Everyone, selling price of the goods is 5,000. The goods value was 3,000. So the difference between the two, 2,000 is your profit. If I talk about it, profit is going to increase your funding. So that means there is an increase by 2,000 rupees, right? Which of the following transaction does not directly affect the total liabilities? Purchasing goods on credit, it is going to affect our creditor. Taking loans, it is going to affect our short-term liabilities. Owner investment, additional capital, this is going to increase our owner's capital or equity. Paying off the creditor is going to reduce my uh, creditor. है ना? This is something that will happen. So one particular thing which will not directly affect the creditor is basically owner's investment. This is going to affect only your equity part. If your equity increases, then obviously the money that you have taken from other people is gonna be definitely different. If a business assets are of 27,000 and the liabilities are of 5,000, what is the net worth, everyone? 5,000, 22, 27, and 32. When the business assets are of 27,000, liabilities are of 5,000. That means difference between the two will give you equity. 27 minus 5, 22 is the answer. Done, everyone? Which of the following best describes the impact of transaction? Acha, let's talk about any transaction. This particular question is a case study based question. This has to be changed. Okay, everyone, that's it for the day. I hope this session was helpful. If it was, then please go ahead and subscribe to our channel right away. And at the same time, um, download our sessions, watch our sessions every single day. Crash series are available. You can also take up our courses. Where can you take up the courses? Just go on to the area of Adda 24/7, our website. Go on to the area of JIB and CIB. Just go on to the area of exclusively JIB October 2024 or next year and use the code Y541 and get any of the courses at a great discount. 78% discount is available. Parpack revision batches are about to come. Along with this, the crash courses are also going on. So please just check it out right away and join our courses. Thank you so much.